Hello and welcome to today's morning report on Wednesday the 11th of March with me, Rich Perry, market analyst at Tech Markets. The European trading session has got off to a fairly positive start actually, and that's come on the back of a bit of support that we saw in Asia overnight, and just has filtered through into the European session. The DAX 1.2% higher now, and that's sort of coming on the back of the fact that we've had Mario Draghi speaking this morning, and basically any time he speaks at the moment he's obviously talking about quantitative easing and how well it's going to work, and how the fact that it's going to do the job that it's meant to do, and that is certainly going to help to boost equities and put pressure on the euro, and that is exactly what we're seeing today. Euro down another 0.5% early today, and it's interesting that we've seen this come because we've got the dollar index that's been again driven higher by that euro weakness. But this dollar index, this is another way of looking at the dollar index on using the RSI as well, up at 91 on the RSI. So we're getting to really stretched levels on this dollar. A couple of times in January we got to 90 and then fell over. But it could well be that we're beginning to get into the realms of consolidation period now. So that could be coming out. So maybe just be careful on your long dollar positions due to that. It does tend to get to a series of to a stage at which you get a consolidation on the dollar quite frequently when you get stretched on these upside levels. Interesting that we saw huge downside on the Wall Street markets yesterday. 1.7% lower on the S&P 500 as the fear starts to grow that we may be growing into a bit of a correction. The VIX volatility index pulling higher again, and as I said to you previously, that equity markets come under pressure when the VIX is rising, so that is an interesting indicator to watch there. Now, the economic data that we've got to look out for today, and again not too much, but you do have the UK industrial production at 9:30. It's actually expected on the year-on-year data to jump to 1.3%, which would actually be the highest for 10 months, dating back to May 2014. So that would be an improvement on the recent sort of slide that we've seen in industrial production. So that will be an interesting thing, and that could support sterling certainly at 9:30. And then this afternoon we've got at 2:30 we have the US oil stocks, the EIA oil stocks, and that could certainly have an impact on crude. The expectation is for 4.4 million, which would be a 9 months of additions to the oil inventories there in the States. So we'll wait and see what that comes out with. But certainly, 9 week addition, 9 weeks of gains basically in the oil stocks in the States. So also this afternoon we have the Canadian. Sorry, my mistake. So we have the New Zealand central bank, the RBNZ, giving its rates decision, and it's not expected to move on rates. 3.5% is where it currently has its base rate. It's not expected to make any change to that, and that's at 8 o'clock this evening, UK time. So that takes me on to my chart of the day, which is the FTSE 100. Now, FTSE had this huge sell-off yesterday, so 3 days of declines on the FTSE, accelerating to the downside, which basically just wiped out pretty much 6 weeks worth of very slow and turgid gains on the FTSE. Wiped out in 3 days. So what are we doing now? Well, we're looking for just a slight, got a slight bounce today, but you would be looking out for the fact that you need to get above the Marubozu line of this big bearish candle. That Marubozu is basically the halfway between the open and the close, which is the body of this candle, and that comes in on the Marubozu. That comes in around about 6,790 today. That is exactly where it is. But also the fact is that you've got this line of resistance now. This old support became old resistance became new support, but that broke to the downside. So that could now become a pivot level, and that pivot level comes in around that low of 6,778. So that's an interesting point to note as well. You're already testing this 6732 area and it's just sort of consolidating around that, so that is interesting. That was an old low as well, so a couple of resistances there on the FTSE, but look at the impact this move has had on the indicators. The stochastics falling sharply away now, the MACD line's beginning to fall away, and the RSI dropping to a 3-month low as well. So certainly this move that we've had on the FTSE yesterday has had an impact, and it'll be interesting to see whether it can break back above that Marabuza line. So we've got the that was the decline that we saw yesterday, and needs to recover back through these resistance levels. I'll stick the crosshair on there to get you an idea where we are. So that's the initial resistance around 6,730, but then up towards 6,773 is again that resistance there, and the Marabuza line comes in at 6,790, so it needs to break through those to suggest that the bulls are sort of bouncing back, and at the moment it's not really done enough to suggest that this is anything more than an unwinding of this bear move. You've got the hourly RSI back at 19, and it still could have a bit of a way to go back towards 30, and that may suggest that you could get back towards 6,770 area, but I would say that that could well be a chance to sell, because it certainly looks like there's been a change of impetus within this in this FTSE chart, and it looks like it's more corrective now. But it'd be interesting to see how this one goes. But anyway, I wish you good luck in your trading on FTSE today, and I will speak to you later. Thank you.